The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look at the German DAX this morning, folks. The reason why I'm bringing up this 135 pattern is because we're going to discuss it just a little bit later in the show. In about 3 minutes, we're going to talk to you about the corn market. One of our folks has asked a question about, these different patterns that form and how do you read them and stuff like that. I'll try to answer them the best I can. But you'll notice that German DAX has made a beautiful 135 pattern. Here, I'll update it. You can see what's happened here. We've dropped 200 handles here. That's no small amount, folks, in the terms of the old DAX. That's a lot of money. So we're going to see how that ends up. Let's get to that corn because it's a very interesting question that the folks ask us here. This is from someone over there in far, far away across the pond over in Europe. In Bulgaria. Hold on, let's bring this up here. We're going to take a quick look here. What we're going to be watching here, here's the question that was asked. First of all, you have a bullish market with the head and shoulders pattern. You had a beautiful Gartley form on the 14th, correct? 14th of January, had a nice move, 10 cents, $500 on a commodity that only, has $2,000 for margin at the most of the time it's between $1,500. But you'll notice that the 135 pattern that's formed right here in the corn. Now that's a beautiful pattern because you have perfect symmetry between 1, 3, and 5. The distance between those is exactly equal. That's the harmony that we're looking at here. But from my perspective, and I'm just going to give you my 2 cents worth, and you get change if you ask for it. But if you look here on February the 4th, take a look at February 4th on Monday, you'll be noticing here that we have a cycle due. Well, at that time, I believe we have a nice new moon coming in at that time. So let's pay close attention to that one because it could be a really, really interesting one. So we'll pay close attention to that. Remember that one we had in January when we had that new moon with the solar eclipse? That was right near the bottom in the stock market. Now, the corn reacts really strongly to the moon. So my assumption is we're going to come down into the 4th of January on Monday, and that's what I would be looking at to be watching it. But what you have to do is you have to decide if you wanted to remain bullish here on the corn, you could certainly remain bullish and wait and see if it pops through 0.5. That's it. But if you're trading shorter term, and remember you've got lower highs ever since last July, so it's not a runaway bull market. So my assumption is it'd be good to take profits here and look for a pullback into January the 4th. That's what we're trying to keep an eye on. Now, since we're talking about the 135 pattern, I want to bring another one up to show you. This is one that was forming last night. By the way, we have Norm Winsky today as our guest at the half hour. Always good. So have your questions ready. I'm sure he'll be able to answer them. You'll notice here, this is the British pound on a 15-minute chart. You can see the 135 pattern that is forming. And, sometimes they work, sometimes they don't. But remember, the 135 should have symmetry really closely between 1, 3, and 5. That's the key to that. And then the ratios of 618 or 78% should be, spot on, too. That's the reason why that pattern is so important. Bill and Roy Longstreet used that pattern without the ratios. I met him in 85 or 86, and I showed them the ratios, and they got very excited about it, and we're very, very thankful. I mean, I didn't have anything to do with the ratios. I just showed them, what they're doing. But let's look what happened to that British pound here, folks, last night, because it's interesting that this one absolutely worked pretty nicely. Now, they don't always work this way, for sure, but when they do work, it makes it, very, very a good thing. Now, we're trading down around the 131 level now, in the British pound, and it looks like we might be getting a possibility of going a little bit lower, but we'll have to do that one trade at a time. So that's what we're watching. Okay, the next question that we have from one of our listeners from here in the old USA is about General Electric. Let's bring General Electric up. We're going to take a look at it long term here because this has been this was the last stock in the Dow Jones Industrial Average, folks, going back into the late 1800s, 1900s, and it was the very last one. The things to really pay attention here, if you look at the high in 2000 when we were having the dot-com bubble, you can see the really clear three drive to a top pattern when it was up there around $60, and it was just spot on, a beautiful 1, 2, 3 pattern, or three drive to a top pattern. You had the breakdown, a 50% retracement, then the ABC structure down, a nice rally up to 32, and that's the long-term picture. But to really get a really fair view of what's happening with General Electric, we should look at it on a daily basis. And guess what? That's what we're going to do. We're going to look at it on a daily basis, boys and girls. Here we are in Mr. Rogers' neighborhood. All right, let's take a look at General Electric. You'll see up around that $30 level, we had a head and shoulders pattern right at a 78% level. The key to this, folks, if you look at the far left, where that little square is marked at 1.618, that was the expansion of that whole move from 2016. That brings you to $11.20 a share, and we broke down. Now we're rallying to a 38% retracement of that whole move, and it's taken 2 months to get to $9 from $6.50. So I would not be buying General Electric in here under any stretch of the imagination. Hey, we've got a caller on the line from New Hampshire. How cold is it, Mark?
It's really hot in my house, but outside it's cold, and we like it.
What can I do for you, my friend?
Oh, I got all these long positions in gold and silver, and I'm trying to figure out how to make the, I'm in the nugget, and I'm trying to figure out if I should add to my position today.
I wouldn't add to position today for two reasons. One, you're coming into a new moon on Monday, and gold reacts really strongly to that. But let's take a quick look here at the gold market here. You'll be able to see. I'm going to put up the April gold for you, and then I'll also put up the XAU. You might have to stay with us past the break a little bit, but let's take a look at it. You'll notice since January the 28th, we've had just these 38% retracements. We had one on Tuesday, we had another one on Wednesday, and then yesterday we had another one right into the to the report, for the Federal Reserve, and that hit spot on. And you'll notice up here when you're looking at this level of around 1333 to 1335, 1332 to 1333 should be some type of resistance because you've got a double 1.618 correction there. But there's another one that is even clearer from my perspective, and I'm just looking at charts. I don't know diddly squat from the the fundamentals of stuff. So let's just find this one that I have, and I believe this is it. Let's do the gold daily. This was the spot gold. Let's get that one up here so we can see it also.
All right, I'll go offline and I'll listen to you.
Yeah, stay with. Okay, I'll finish it up. Thanks for calling in. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. We're going to try to answer Mark's question whether he should add to the gold and silver here. We're looking at the XAU gold silver index on a daily basis. You'll notice that we're making a 61% retracement from the high of July of last year. And also, we're also making a 3-drive pattern since mid-December. We're also 7 days up. 7 days up is enough to scare me because that's you're buying into a lot of overbought conditions, in my opinion. But let's make a big caveat right here, folks. If there was ever anybody that was bad at buying strength and selling weakness, it's me, because I do not do that very well at all. That's the understatement of the year. I can buy on retracements and sell on rallies, but by golly, buying on strength has not been something that I've worked on very much. I've tried it a few times, but every time I've done it, that big man with the sickle is standing behind me, asking me to write a check into the CME one more time. No, I don't do that, but I would be willing to buy it if you had a nice 3-day pullback. We've got this new moon coming in here on Monday. That ought to bring some fireworks to this, and we've already seen that the long-term picture in that gold can take us up here where you can see where we are. Just get up here, take a look at it. If you look at the long-term picture in gold, it's up around 1335. We were just talking about 1333, so you're within a heartbeat of that right now. Now, the one that you're looking at right now, this was the February gold. We've now rolled over to the April, so you've got to make that $5 correction. So that's really what you're watching. So anyway, the odds, let's talk about probabilities for just a second. Larry Williams did some great studies way back in the 70s about the number of times, if the market's up 3 days in a row, the possibility of it being down on the 4th day is like 60%. On the 4th day, it's like 70%. The 5th day, it's like 80%. It stays about 80% for the 6th, 7th, and 8th days, where it goes to about 85%. But beyond 8 days, there's really not much you can, put your hat on, because sometimes it'll go out 8, 12, 13. The longest run of days, I believe, has been silver and sugar. Both of those were, I believe, 22 days in a row. In silver, I believe most of those were limit up back in 1980, but I don't remember that too much. Well, I remember some about it, but I was mainly in the gold market. I had some silver, but it was mainly the gold that we were in. I did very little silver trading in the gold. I did earlier when Mary Rivers was doing the astrology stuff, but before that, the longest in the S&P is 13 days. David, you're a wealth of it, of information, buddy. Do you remember when that was, David, by any chance? I was just curious to see in what section you were of the. Probably it was in 2015, would be my guess. I don't know. We'll see. See if that's correct or not. Okay, let's move on to something that I think is super important. It's not that important, David, but we've got a really big one happening, folks, here. This is the long-term weekly. I know you guys don't trade weeklies, but this is something really big getting ready to happen, and it's in the news. This is the German Bund. You'll notice here that we have this huge ABCD Gartley coming in at the 78% level. Looks quite interesting, as you can see. What we want to do now is we want to go down to a little bit tighter time frame. We'll go down to maybe an hourly chart, and we'll bring this up and let you take a look at it. And you'll see here in that bond on that 60-minute, we did take out the highs of the 24th by a couple of pips, and then sort of rolled over a little bit. So that's neither here nor there. Folks, maybe these interest rates are going to go a lot lower, but boy, the charts certainly don't show that. But that's my 2 cents worth. I'm just looking at the charts. I mean, they may have a little bit more of a rally in the bonds, but I don't see them getting much above 146.15 to 147 at the very most. If you get above 147, yeah, maybe a little bit more, but they sure have a bearish patterns in here. That doesn't mean they're going to turn, but it certainly does look like they're kind of bearish. You can see here. Hold on one second. We want to get that one up. Get the the euro. The euro's just been bouncing around between that. We had a beautiful 61% retracement in the euro last night at 115. She was 115.07. We sold off about 40 pips. Hasn't really done very much, but it went up and made a perfect 61% retracement of the 78% retrace. 61% retracement of the previous high, and then of course it didn't go anywhere. So that's it. Now, stock market. Here's the one that we're watching. Let's do the NASDAQ first because it's popped up on the old screen first. Here's what we're watching in the NASDAQ. This is an hourly chart. You can see the from going back 2 weeks ago. And if you remember, that 14th was, you'll never guess what that 14th was. You're right. It was a lunar cycle that our good friend Norm Winsky talked about. Has a nice low in there. And now we have coming into February 4th. You've got a beautiful ABCD pattern in here. You also have the butterfly pattern. So you've got several things to tell you that 68.80 was pretty good. Folks, if you remember from the newsletter, those of you that get the newsletter, this is what we thought would happen this coming week. And I'll just bring this up. This is the area of strong resistance that we're looking at right here. You can see that area of 26.25. And you can see that area, it's 27.02. We got as high as last night. We got as high as 26.91 or 92, I believe. We're trading a little bit below that right now. So it's going to be very, very interesting to see how this comes out. We're still in a downtrend from October, November, December. This is nothing more than the strongest rally we've had off of that big 3 drive to a bottom pattern that occurred back on December the 26th. You know, we had the little 382 pullback on January the 4th, another big Astro day, and then, of course, we popped up here to what we're looking at. We've got this new moon coming in Monday, and I expect to see some really big things happening. We've got one more day to complete the month, and then we'll see what happens. This has been one of the best months ever in stocks, I believe. They're up better than 7% coming off of that low bottom that we had back on the 26th. And so it's been a month of just almost straight up move with just a small corrections on the way up. We remember that the importance of that low on December 26th is so important because that was the perfect 61% retracement on the New York Stock Exchange Index. And on that banking index, it was the 382 from the 2009 low, 61% from the low last year. All of that stuff tells us that that was a super big bottom, and you know this thing could make new highs. You can't rule it out because a lot of things going on, and it takes the news and turns it around. And that's what we're looking. Someone asked me a question about the Chinese trade talks. I put a call into the White House today, but nobody answered. So as soon as they get back to me, I'll let you know what they're telling me. But again, you might want to take that with a grain of salt. Look at the charts. If there's more buying, prices are going up. More selling, prices are going down. The grains look okay to me. I'd like to see one really good sharp sell-off. Like to buy some more, but we'll take a look at it. Watch the wheat really closely and also the corn. As for the sugar, it's starting to move a little bit, as is coffee. Both of those we've had on our watch list for quite some time. And another one coming up, folks, when you get the newsletter this weekend, pay really close attention to it because it's got a lot of things happening, and that's in that energy complex. Stay tuned for Norman, who calls it to the minute Winsky. He'll be with us at the half hour at 9:30. So we'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, back, folks, and we have Norm Winsky on the line from sunny Florida. Norm, how are you?
Hey, Larry, thanks for having me on your show.
Fire away, buddy. You've got the mic, and you're in control.
Okay, thank you very much. I asked to come on your show on Thursday, January 17th, because it was just ahead of the Friday the 18th weekend. We had a 3-day weekend there with the Monday holiday, and over that weekend, just past midnight on Monday the 21st, there was a super lunar eclipse. That's when the moon is at perigee, when it's its closest point, and lines up with an eclipse all at the same time. That's a rare event. And so then told the folks that we want to watch the following markets. Here's your shopping list I gave you, and we're going to go over these. I left out some of the ones that are not very that are thinly traded, so we can save some time. But so anyway, at the top of the list, I had copper, and you can see. Hopefully, you can see the charts here. And I marked where the Friday the 18th was, or or the next day. And there's the green arrow there, right at the top of the nice little short-term top there for the copper. I think you could have made some money there selling it. Here's your corn again, same deal. Corn ran up right into the weekend there, the Friday 18th weekend. That's the 18th there, where the green arrow is. Japanese yen, I always tell you, usually feature one or two markets, and then we have our usual suspects. And among the usual suspects, we have the grains and the precious metals, and the currencies, right? So here we go. There's your here's your Japanese yen. Japanese yen. Somebody once did a study who was skeptical about this stuff working, ran it through their computer, and they thinking they were going to show me that I didn't know what I was talking about. When they got all done, they go, "Wow, this stuff works on currencies, and it works especially well on the yen." So there you go. There's the yen. Not great, but close to the bottom there on the yen. So it's right on the edge of a winner. Maybe I think if you hung in there, maybe you wouldn't get stopped out. It's bottomed about a day or two later. All righty, the dollar was not so cooperative. You kind of had a halfway top there on the dollar, and then it dipped a little bit and then popped back up. So you probably would have got stopped out on that, I'm guessing. So I put a red arrow there for a miss. Here's your gold. Gold, you could have gone either way. Yes, you could have sold it near the top going into the weekend, and then we had a nice down on the. We had the nice down after the eclipse on when we opened up on Tuesday, and there was your near low there on the gold. The silver was even better on the downside on the making a low. That's been the low for wow. That's like a multi-week low there on the silver right to the day of the right after the eclipse. There you go. Here's your S&P 500. Kind of hard to see on the scaling we have here, but that was about a 2.1% drop from high to low from Friday to the low was on the following Wednesday, and that dropped 2.1%. So I think you could have made some money there. Got more a chart with the S&P on it. That'll show you more details. All right, so here's my Bradley model. My version of the Bradley model. And you notice the blue line, I do that in weeks in advance. And then as we go along, I update this for myself and my clients. I put the overlay the actual prices on top. The black bars are the 10-minute S&P 500. And there we go. So there I did the forecast. Here's different details. I had major planetary events. I put on the chart in advance, and you can see how that works out. We had a solar eclipse over here. Here's I'm going to give you a little trade management lesson now. So how do you use this information to trade with? Well, if you're looking for a reversal, maybe the market, here we go, there's the black bars go up into the solar eclipse. You think, oh, I'm going to short that. And obviously you were wrong, but we give it a 1 day either way. And if it takes out that, once you establish that time box, it's like a time window there. If you take those exceed the high or the low of that box, you better stop and reverse, because it's probably going to go, if you're trying to short it and it takes out the top, it's probably going to go a lot higher, and that's what happened. I would have bet money. I was pretty confident that we were going to get a reversal here on, because one of my favorite things is Mars. And well, the planet's at zero latitude. This is Mars that only occurs every 2 years. And here again, this market wanted to go higher. So you got your little box there. If you went short, it's okay. If you follow my rules, it's okay to be wrong, because you're not going to be wrong very long. Then we got here to the eclipse, and look at that nice top right on Friday the 18th. There you go. There's the moon. That smiley face there is your super lunar eclipse. And there's your top there, just topped a few hours ahead of the Friday's close. Pull back a little bit into the close, but you're near the top there. So I think I would, at a minimum, I told all my clients, whatever you do, do not go home along this market into a lunar eclipse. Never go home along into ahead of a lunar eclipse because it works about 75% of the time, you know. Alrighty. Moving ahead here now, I'm going to show you, because I'm featuring in a minute, a few minutes, you'll see we have the new moon coming up that Larry mentioned, is right on the close of Monday. Monday's close right after 4 o'clock Eastern time. And it's in Aquarius. Aquarius has to do with copper, so I'll be featuring copper this month. We're running a special in aisle 5 on copper, you know. And so there we go. Here's the fractal for the copper for last year. Now, understand that these blue bars I got on here, like back in February for the entire year. Then I overlay the prices on top, and you can see there's a pretty nice correlation there between the blue forecast and the black actual prices. You see that? You would have had this for almost an entire year, and you could have tracked that for the big picture on copper. Here's another fractal, and the reason I'm bringing these fractals up is because it's the fractal time of year when I do these for the coming year, and I review the the ones from last year. And also I'll be going over some other forecasting models here because it's that time of year with the January barometer and so forth. So anyway, here's your copper fractal. Larry's been following the natural gas rather closely, and here's the fractal last year for the natural gas. You notice that the blue bars were saying that we're going to get a big run up into near the end of the year, and then top out about December, and then a big sharp down. It was off just a little bit. It was a little late, but still not too bad. What do you think, Larry?
That's a beauty. I'm looking at it now. It looks pretty interesting to me.
Yeah, here's your
So
euro.
you sell on the high and buy on the low. Is that your strategy?
Something like that, yeah.
I like it. I like it. It works for me.
I'm going to write that down, you know.
Keep it to yourself.
All right, well, don't tell anybody. All right, here's the as a lot of these markets, the fractal works, but it's inverted. I don't know why. We live in it seems like we live in a mirror image fractal universe. You know, it's crazy, but it works really well. Here's your euro. I know a lot of your folks out there like to trade the euro, and there we go. That's pretty nice. That's like for the old dinosaurs like you and I, Larry. That's kind of like Fred and Ginger dancing, you know.
I'm a Tyrannosaurus Rex. We'll be right back with Norm Winsky after we pay a few bills. Stay with us, Norm.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, we're back, folks, with Norm Winsky of Astro Trend out of Florida. Go ahead, Norm. Continue on, please.
Yes, sir. When we broke for the commercial, I was showing the Euro fractal chart here, and you can see the black bars and the blue bars are dancing like Fred Astaire and Ginger Rogers there. They're dancing together very nicely. And if you're old enough to remember who they are, then you're an old dinosaur like you and I, Larry. There you go.
We still have a Fred Astaire dancing studio here in Tucson, believe it or not,
yeah.
Norm. Go ahead, my friend.
Okay, anyway, so now we're going to look ahead. What's coming up? So we got a lot of exciting stuff going on during this time of the year. We have today is the January 31, which will end January, and that means that we can generate our January barometer, which is, as many of your folks have heard, as January goes, so goes the year. That's actually a fractal statement. You take a piece of the year, extrapolate it out for the whole year, and you get a forecast. So I will be putting that into my February letter, and the folks that get my February letter and contact me and get that letter will have that. And they also, let me give you a little theory behind these two things. Now, the January barometer has been statistically, I didn't do this, somebody else did this a few years back, but they actually ran it through the old statistics machine there and said that the January barometer is accurate from 1950 on forward for about 75% of the time. That's pretty good. The only thing that I found that is better than that is the Super Bowl indicator. The Super Bowl indicator, you have the NFL is divided into two conferences. You have the NFC and the AFC. And if the NFC wins, that's bullish. That means we should have an up year. If the AFC team wins, that's bearish. And that means we should have a down year. And that works over 80% of the time. And since these two things are forecasting the same thing, a high percentage of the time, they should agree. And that is how, Larry, when I came on your show a year ago in January, I forecasted that the Philadelphia Eagles should upset the New England Patriots. The Patriots are heavily favored to win, and the Eagles won because we had a big up January,
Can I say something, Norm?
Sure.
Here at the TFNN, we have what we call the restaurant indicator. You're only as good as your last meal. So tell us who's going to win Sunday, Bubba. That's what we want to know.
I will do that right now.
Let's wait. We'll hear it. Go ahead.
Well, I think it's highly likely that where we're at now with the stock market. I think we closed the last year, coming into January 1, we were about at 2509 on the S&P. So that means that there's it's like a 1 in a million chance that we're going to break 2509 here in this today. We're not going to drop $100 today or more. $150 a day. So that means we will have an up month January, which means that the NFC team should win. That would indicate that the Los Angeles Rams should beat the New England Patriots, and Mr. Brady will have to go home, without his Super Bowl ring a second year in a row.
Okay.
Okay. All righty, and then so that's a little experiment I've been running the last couple of years, and
Yeah,
it's
you've been
pretty
right.
interesting.
I think you've been coming on our show for since 2015, and you've nailed each one of the Super Bowls.
I hope so. I
Yeah,
don't
yeah,
remember.
I remember. I don't bet on these things, but
Yeah.
I remember us talking about them because, especially last year, because Philadelphia was a big underdog and they won, and now the Rams, I believe,
That's
are an underdog.
your
So
friends the Duke brothers. They flew out to
yes,
Vegas there and
yes, they did. They had their own box there. That's for sure.
put down. You said they put down $5 on. You flew out there and put down
Yeah.
$5 on the Eagles. You know.
Okay. All right. Now, what else do you see?
So
Questions from one of our listeners. What's your favorite trade coming into February 1st, Norm?
well, my whole system depends on. We have the key. Here we go. Write this down. This is one of my most important principles. The key times give you the key prices, and the setup is like half the game. Okay, so if you identify certain markets at certain times, and if that market then gets to an extreme, there's a high probability that that market is going to reverse at that time. So astrologically, we have certain things indicate that there's a good probability that you want to be watching certain markets. We're going to have a new moon in Aquarius on Monday's close. The Aquarius, the sign, the commodity that goes with Aquarius is copper. So keep your eye on copper. Not guaranteed, no promises that it's going to be in a good position. We will, but if it does has a big run up or a big run, big sell off into Monday's close, then you have a high probability for reversal. Right now, the stock market had a heck of a run yesterday, and if that rally were to continue into Monday, and especially Larry, we've taken out on the big decline. We took out the 382 retracement. We took out the 50% retracement. This next step is 618. I think that's 2714 on the upside.
Yep.
On the S&P. So if we were, this is an ideal scenario. Doesn't mean probably not going to happen, but if it does, then it's like all your dreams come true. And so if we get to 2714 anywhere in Monday afternoon or anywhere near the new moon there, that's probably a high probability short there.
Okay.
If on the other hand, if we have a big sell-off into Monday's close, probably a pullback low. Okay. And then we have here's your shopping list here. We have copper is our main featured market you want to keep your eye out on. But we also have our usual suspects of your grains, precious metals, and currencies. And so we're going to look at corn, gold, silver, soybeans, stocks, T-bonds, U.S. dollar, and wheat. Okay. Also, February is my when I do my February letter every year, I call it my February's forecast for fun month. And so I go pull out all the fun forecasting models like the Super Bowl indicator and January barometer, and then you can't if you're going to have the fun forecasting models, we got to talk about Chinese astrology, and we're going to have with the new moon. You got the year of the pig this year, right? You might know that because I think don't you have a Chinese wife?
Yes. Uh-huh.
Yeah, so you probably hear about this. So anyway, it's a year of the pig. I don't know very little about this. I went and looked it up while I was writing this. What that means? They said the pig was fat and lazy, and there you go. Here I copied it right off of Google. Pig is not thoroughly smart animal in China, like sleeping and eating. So maybe that means China's going to have a slow economy. I don't know. Maybe their economy is going to hit a trough. How about that, Larry?
Sure.
Has a little hog humor there, Okay. All right. That's my. Anyway, I'm going to have quite a bit of this stuff in my letter. And if you get my letter, this is probably the best month of the year to get my letter because I'll have all these longer-term forecasting models in there. So there we go. So now we get to talk about how you get the free stuff, Larry. So contact Norm right away. So I do my classes usually the first week of the month. That'll be next week. And contact me right away. Here's my contact information. And there we go, Norm, 239-594-3939 in Wisket, Embark, mail.com, and it's on the should be on your screen. And there's my Skype address is norm.linsky. Thanks for holding back the music there for a second. And everybody have a great weekend, I guess, right?
The universe provides us with opportunities all the time, and I was no different. In 2006, I invested $2,500 in a 2-day master trader course taught by Tom O'Brien, then ranked as the #1 market timer for gold. The fact is, if you want to be the best, you must learn from the best. Hi, I'm Steve Rhodes, author of Mastering Probability and the Market Timer of the Year for 2018. To celebrate this accomplishment, TFNN.com is offering you a free 2-week subscription to my award-winning newsletter service, and there's no charge to you until day 15 unless you cancel sooner. That's right, we're waiving the normal upfront deposit, and this offer is available to anyone and everyone, even if you've tried Mastering Probability before. Sign up now, and I'll teach you the tool that identified the bottom in the Dow on January 26th, the morning that led to the largest daily point gain in history. This offer will expire on February 10th, so go to the homepage of TFNN.com now and click on Mastering Probability.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're back, and we're going to remind you that we have a new moon coming in on Monday, but even more importantly, we have Tim Bost of Financial Cycles Weekly from Sarasota, Florida, will be our guest tomorrow. I think it's important that we put up the chart that he gave us last month when he was on. It has been very, very accurate. If you want to take a look at it here, you'll be able to see that it was pretty much spot on, and we'll be able to ask Tim some questions about this tomorrow. So that's his version of the Bradley model, is my opinion, and we'll be able to take a look at it. Keep an eye on these interest rate structures, folks. We've got some really big things happening across the pond over there in Germany and also here in the USA. So pay attention to that bond trade because it's got a really good opportunity here to possibly make a couple of bucks. You never know for sure. And also we want to watch the gold and silver as they come in. We're up 8 days, so we're due for correction in the gold and silver. It's a question of if and when, but we'll be watching it relatively closely. All of our corrections in the gold have only been $7 or $8 this past week, so it looks very, very strong, but it can still have any type. We could get a somewhere between a $17 and $34 correction, and if you got a $34 correction, I would buy that one because this trend has certainly turned up, and looks like it has more legs to go. It's been rather orderly on the way up, and that's normal because most of these things work with a great deal of harmony. Final question someone asked about the hog market. Yes, we're friendly to the hog market down at this area in the June hog. So far, they're holding the 61% retracement, and we'll cover that more later on. We're going to try to have Rich Anderson and Cy Monley on next week. Time permitting, they're both quite busy. Rich is busier in retirement than he was when he was working, so that's something to pay attention to. So live every day in an attitude of gratitude. We'll see you tomorrow, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.